So here we have GBP/USD that we are currently looking at the market flow, and I'm going to show you how I was able to profit on a RR1 to 1, a little bit over. I could have really held this trade, probably aimed for a 1 to 3, 1 to 6, but because I am a trader that does not like to hold and be greedy and like to take my profits when the opportunity comes, this strategy will work best for people who are looking to scalp and who are looking to swing trade. And the reason why I believe that this is going to help you as a trader, even as a swing trader, for the simple fact that this strategy would give you a great risk to reward ratio. Okay. If you tend to risk more than 20 to 30 pips stop losses, yet you're aiming for only 20 to 30 pips, I highly encourage that you lessen your stop losses and aim for more RR profit so you can actually profit way more than you lose. There's going to be a time where you are going to be losing more than you win. So you really want to make sure that your risk management is a lot more smaller than your risk management is a lot more smaller so that when you do profit, they can actually cover up for your losses. Okay, so let's go ahead and get into it. I actually took this trade this morning. If you happen to watch this video, maybe later on, maybe tomorrow, sometime this week, you got to this video. Today is April 1st. It is the day after Easter, which is, we call it the Resurrection Sunday, where Jesus has died for us, resurrected on a Sunday, and has definitely made us who are wanting to follow him alive. And I really believe that God wants to help those who are helpless. Okay, just like I am trying to serve you and help you become a better trader, I believe in following God and doing things for his kingdom. So when I am teaching you about trading, I'm not just doing it just to be doing it. I'm actually literally trying to help you. Okay, so many traders are getting stuck in a trend of they're hopping to different strategies, hopping to different courses, and there's nothing wrong doing that if things aren't working out. However, I do believe that there's an issue with that when you're not giving it time to play itself out. Okay, so I'm going to teach you this strategy. You can take it or leave it. And then in my next video, we're going to start a trading psychology series. Okay, so I want you guys to really brace to what I have to say, because this is really going to be some good beneficial knowledge that you don't want to skip over. Okay, so here we have GBP/USD. Right now, I think I told you guys before, for people who actually watch this channel and watch my videos, you need to understand order flow. You need to understand market conditions. You need to understand market structure. Okay, if you don't understand these things, I advise you to go back to my earlier videos and just go through them. Okay, and just watch them. Okay, it might be old, but they're definitely beneficial to you. Okay, so we all know that the market likes to move in waves, right? It will move either this way, or it can move this way, or it can move this way. All right. All right. This is a uptrend, right? This is a downtrend, right? And this is consolidation, or sometimes you can call it range. All right. All right. Range is a little bit more sporadic wide. Consolidation is more tight spaced. Okay. So if you look at these things, these are the market conditions that we trade. All right. And within these market conditions, we are looking for two things. We're looking for a buy or a sell. Anytime the market is in this consolidation zone, we don't trade it. Not saying we don't trade that day, we just don't trade it. Okay. So right now, what are we looking at? All right. What is the market in? It's in a downtrend. All right. So are we looking for buys, or are we looking for sells? And that's the question. You always have to ask yourself, are we looking for buys and sells? Okay, this is a supply and demand strategy. Okay, you need to understand that this strategy is really highly effective if you apply it right. Okay, you have to apply it right. You have to understand the market conditions. You have to understand how the market moves in waves and forms. Okay, And so if we are looking for a sell, what we're looking for is a pullback, right? But however, we need something to happen. All right. We need a breaker structure like this. All right. So once we see a low that is broken, right, from higher highs, higher lows, and lower highs and lower lows. Okay. Lower highs and lower lows are for downtrends, and higher highs and higher lows are for uptrends. Okay. But this particular point, we are in a downtrend. So we're looking for lower highs and lower lows. All right. So the lower low, of course, will be here, right? And that will be our retest zone, right? So what we'll be looking for is for the market, let me just back up a little bit. We'll look for the market to break it low, right? Then we'll look for that, the supply zone, which is probably right here. All right, after breaking that low. And what we'll do is we will look for a retest into this area. Then once it retests, we will look for a break of structure of the previous candle. And once it breaks the structure of the previous candle and continues down low, we will be looking for sells somewhere in this area, okay? So I'm going to show you exactly how I took this trade, how I profited it, how I got out the market, and I just called it a day, okay? So this is something that's just going to make you consistently profitable. And I promise you, it will make you consistently profitable, but you have to be disciplined. You have to be patient. You can't be greedy. You have to take the profits when the markets continue. The only way that I could say, if you want to aim for more profits, is if your account is up in profit. You're okay with the loss. You're okay of losing, and you're okay with the market conditions, okay? Or at least put it at break even, or put your stop loss in profit. So if it does go against you, there you go, okay? So we have a break to the low. Right now, I don't trade until after 8 o'clock, okay? So I was not looking at the market around this time, but I'll show you where I was looking at the market, okay? So it's 8 o'clock, right? The market is moving its waves, lower highs, lower lows. Okay, broke this low right here. I'm not expecting it to necessarily come up here because it's already creating supply zones around this area, which I believe that's going to shoot a little bit more far down. Okay, so what does the market do? All right, it shoots down. All right, what low is it breaking? You can say it actually broke this low first. All right, and then it broke which low? It broke this low as well. Okay, so it broke two lows, and some people's like, well, what do you do about that? Okay, what you do is you want to look at the first supply zone with the first break of structure of the low. Okay, so this is not necessarily the low that you're looking for. Why? Because we see that the market created a low, high, low, high. Okay, and then this bad boy was taken right here. So this is the first low. All right, and since we are looking at that first low, what do? Well, this is what we do. We create a supply zone where the order block area is, okay, which would be right here. All right, so this will be what I call your A setup, meaning this will be your first supply zone that you wanted to come back to retest to. Okay, now sometimes the market will create another supply zone before retesting into this area. And what you can do is if it creates another supply zone, you can use that as we call your B zone. All right. Which I will show you in a second how this will happen. But B zones can be a 50-50. Okay. I usually consider them 50-50. Can you still take them? Absolutely. I'll take them still. But they must, like I said, they must still follow the rules. All right. So we're waiting for the market to do what? We want it to retest in this area and then go back down so we can take that sell. All right. So let's go and push forward and see what happens. All right. Now, necessarily, when I'm looking for the trend, guys, I do look at them 1 hour. I look at them 15 minutes to see what the trend is, but I mainly look at the 5 minute more oftenly to see what is currently trending. Okay. So even if the market is going down, if I see on the 5 minute time frame is kind of pushing up a little bit, and I see that's a little, like pretty much reversing, then I'll look for buys and I'll switch my buys. However, I try to stay with the 1 hour trend, 15-minute trend, and a 5 hour trend as much as possible. Okay. So you have to understand, like, if it goes against you, you have to be willing to change your buys. Okay. So this market has came up a little bit, pulled back, and then it came down. Now, is this another supply zone? Yes, it's what we call an order block, okay? So this could be your B zone. However, I'm not really going to focus on that, but you could say that if this tends to not work out, 9 times out of 10, it will go to your A zone, okay? So we're not going to focus on that today, okay? So we're waiting for a retest, all right? And then we have the retest. Now, most people will get in aggressively right here, which is totally fine. It'll give you a better RR risk to reward, which is like a 4-pip stop loss. However, I do believe that it is best that you wait. It's best that you give yourself a little bit of room because sometimes the market will just come up, knock you out, and then the market would just shoot right back down. So if you do end up entering a trade, I usually put at least a 10-pip stop loss. Give yourself some breathing room so that way you don't have to worry so much about the market coming, back on you. All right. So after the retest, okay, what I tend to do is I look for the breakup structure of the next candle, which is this one. All right. However, since this candle closed bullish and it didn't break this low, then once the next candle form, I'm looking for the next candle breaker structure, which is this one. All right. So we wait for this breaker structure to happen. All right. Boom. It broke this candle's low. So once it breaks that low, I'm in shorts. I am risking 10 pips. All right. I'm giving myself some breathing room. All right. And people are like, oh, this is the high. This is the liquidity. You're going to be stopped out. That's crap, guys. Like at some point, we have to stop thinking that we're always going to be stopped out or we're always being trapped. That's not true. The only person that is believing that is you. You're trapping yourself thinking that just because you are liquidity, which in a lot of sense, everybody's liquidity, that you're going to be stopped out or the markets are after you. The markets are not after you. The markets is too focused on making their money versus worrying about you. There's too many of us in the market. They don't see your stop loss. I think we get into this wave of conspiracy theories and all these information that we think we know that we really don't know. And the matter of fact is there's information out there and there's big people who are market makers out there who will tell you the truth about trading that has nothing to do with the manipulation of taking your money. All right. The only thing that happens is you and I will get in their way. And sometimes that is what it is. It comes with trading. Okay. So back to this, we are setting our stop loss 10 pips to give ourselves some breathing room. Now, where I set my take profit, I set my take profit 10 pips. Okay. I don't say, oh, I set my take profit to this low. I don't care. Okay. The only thing I'm looking for is a 101. Now, if I see a big push down, I will aim for a 1 to 2 or a 1 to 3 because I'm realizing there's some volume coming in, which means there's some sellers, there's some bears that are crushing in the market. There's some big players that are taking profit. And I believe that this is going to help me hold my trade a lot longer. However, because of the simple fact that I don't want to be greedy, we're going to aim for a 1 to 1. Okay. I think this was actually a little bit over 10 pips I had because it was, yeah, I remember the profit I had and we want to see it go down. All right. And take profit was hit. Okay. So imagine if you did this 10 times in a row, right? Let's just say you had somewhere around $5,000 in your personal account. All right. And then we'll go to the prop firm space. And let's just say that you was aiming for $100, $100 a day. All right. Within $100, right? You're looking somewhere at 10 times $1,000. Okay. Within 10 days, would you not want to pay yourself out $1,000? Okay. If that's not enough for you, you're being too greedy. You're being stingy with your profit and you're not thinking of the long haul. You're thinking too short term and you're trying to be way too extravagant with your profits. Okay. Now think of it profit way. If you had 100K account, right? That would be $10,000. Okay. And if you look at from that standpoint, and we're not even talking about losses here, that's still a lot of money for 10 days. Okay. Even if you lost 3 times, all right, that's still $7,000. Okay. you have to look at this as a long-term longevity. Okay. You have to look at this as consistent profit building. Okay. If you're trying to aim for big super RRs every day, you might as well become a swing trader. And I'm gonna be honest, swing trading is not easy. But I'll tell you this, more than over mostly of the time that I see, the markets tend to go at least 10 to 20 pips every day. And I do necessarily see 10 to 20 pips most of the time when I'm in profit. So what's better? Aiming for a big RR that you necessarily don't see every day, or aiming for a 1 to 2 RR that you usually see almost every day. Okay. I don't trade Wednesdays. And the reason why I don't trade Wednesdays is because I've realized, based off data, statistics, and myself off trading data, I tend to lose a lot more on Wednesdays. Okay. The only day that I'll trade Wednesdays is, for some reason, I'm not going to be trading Thursday or Friday, something like that. Right. That's just my trading plan. And I do believe staying at the market sometimes and giving yourself a day of rest from looking at the charts is very helpful for your brain. So I hope this video was helpful for you, and I hope you practice this trading strategy if you really want to join the private group. Okay, so I've made a private group off of Telegram, and what this private group does is it helps you see the markets the way you should see it. However, it's going to be more scheduled. So this is going to help you and I be better time manageable with each other. Okay. Versus somebody just randomly joining the group, randomly asking questions, and then, just my sleep schedule might be different than your sleep, but my sleep schedule might be your morning schedule. Okay. So it's best that we say, hey, let's get together, let's schedule, and I can definitely help you. But here's the fee for the monthly fees. X, Y, and Z is all a part of the group. However, guys, I'm here to help you as a trader, whether you join the group or not. You'll see the videos. Okay. This is a video that's really going to help you. But if you really want to get more personal into trading, if you really want to actually say, hey, man, I want to go deeper than this video, I want to see more than just the markets. I want to learn about trading psychology. I want to learn about, how you see the markets. Then we can definitely personally get more into that if you just go to the description, and you'll see the private Telegram group. So I hope this video is helpful once again, and like and subscribe to the channel if you like it. And hey, I want to know your thoughts in the comments. Okay. And please keep it clean. All right. See you in the next video. Peace.